Have you ever invested in a company that seemed like a surefire bet, only to watch it plummet to the ground? Today, we're diving into the tale of Paysafe, a once prominent payment solutions provider that experienced a dramatic downfall. But why did Paysafe crash? Let's unravel the mystery. To understand Paysafe's decline, we need to rewind a bit. Paysafe, founded in 2000, built a reputation for providing secure and efficient payment processing services. Its offerings included e-wallets, prepaid cards, and online payments. The company's success was largely attributed to the growth of e-commerce and online gaming. The rise and fall. In the early 2000s, Paysafe was riding high. Its stock price soared as investors flocked to the company, drawn by its potential in the burgeoning digital economy. However, a series of factors began to erode its fortunes. Factor 1. Increased competition. One of the primary reasons for Paysafe's decline was the intensifying competition within the payment processing industry. New players emerged, offering innovative solutions and aggressive pricing strategies. These competitors challenged Paysafe's market dominance and eroded its customer base. Factor 2. Regulatory challenges. The payment industry is subject to stringent regulations designed to prevent fraud and ensure consumer protection. Paysafe faced increasing regulatory scrutiny, including investigations and fines related to compliance issues. These regulatory burdens added to the company's operational costs and diverted resources away from core business activities. Factor 3. Strategic missteps. In addition to external factors, Paysafe also made some strategic missteps that contributed to its downfall. For instance, the company's acquisition of Skrill, another payment provider, proved to be a costly and challenging integration. The acquisition burdened Paysafe with debt and distracted the company from its core focus. Factor 4. Economic downturn. The global economic downturn of 2008 to 2009 had a significant impact on Paysafe's business. As consumers tightened their belts and businesses reduced spending, the demand for payment processing services declined. Paysafe's revenue and profitability suffered as a result. The confluence of these factors ultimately led to Paysafe's crash. The company's stock price plummeted, and investors lost faith in its future. Paysafe was forced to restructure its operations and seek financial assistance to avoid bankruptcy. Aftermath and lessons learned. While the details of Paysafe's downfall are specific to its circumstances, there are broader lessons to be learned from its experience. The case of Paysafe highlights the importance of adapting to a changing market. Businesses must continually evolve to stay relevant in a dynamic market. Failure to adapt to new trends and technologies can lead to obsolescence. Managing regulatory risks. Compliance with regulations is essential for operating in the payment industry. Businesses must invest in robust compliance programs to avoid costly penalties and reputational damage. Strategic decision-making, acquisitions, and other strategic decisions can have a profound impact on a company's success or failure. Careful consideration and due diligence are crucial when making such decisions. Financial prudence. Excessive debt can put a company at risk during economic downturns. Maintaining a healthy financial position is essential for long-term sustainability. The story of Paysafe serves as a cautionary tale about the risks and rewards of investing in the technology sector. While the company's decline was undoubtedly painful, it offers valuable insights for investors and entrepreneurs alike. With that said, thanks for watching, and until next time.